you're feeling a little bit of whiplash from the markets over the last 24 hours, trust me, you are not alone. It feels like we went from a world gripped by geopolitical fear to one of, well, fragile hope almost overnight. So let's get into it and break down what exactly happened and what's really driving this wild swing. Just yesterday, the whole mood was completely different. After this huge 4% rally, the markets got slammed with a reality check after euphoria. All that optimism just vanished, and it was replaced by this really nervous, risk-off feeling that spread across the globe as those geopolitical jitters came roaring back. And to really get a handle on that nervousness, all you had to do was look at the Indian market. It became this perfect snapshot of a global market just teetering on the edge. And we saw it happen in real time. The Nifty 50 dropped almost 1%, and the BSE Sensex fell 1.2%. Now, what's so interesting here is that this came right on the heels of a massive rally. It just goes to show you how fast sentiment can flip the second a little uncertainty creeps back in. And it wasn't just about stocks. Nope. The anxiety was pretty much everywhere you looked. The Indian rupee was getting weaker against the dollar, oil prices were climbing, and get this, foreign investors pulled almost $20 billion out in just 2 months. Even the bond market was nervous, with yields ticking higher. I mean, all the signs were pointing in one direction: widespread investor fear. So what changed? What could possibly flip the entire script from fear to optimism, basically overnight? Well, the answer didn't come from an earnings report or a central bank. It came from a single, really powerful piece of geopolitical news. This right here, this was the headline that stopped the bleeding. Just the news that Israel was willing to start fresh negotiations with Lebanon was all it took. Suddenly, a situation that looked like it was heading for deeper conflict had a potential off-ramp. And that tiny glimmer of hope was enough to get risk on back in the driver's seat. And when we say risk on, what are we really talking about? Well, think of it as the market's collective mood. When risk sentiment is positive, or risk on, investors feel good about buying things like stocks. When it's negative, risk off, they run for cover in things like gold. That one headline we just saw, it was powerful enough to flip the market's mood from off to on. But, and this is a big but, this is where you have to read the fine print. That glimmer of hope is exactly that, just a glimmer. The situation's been described as peace light, and for good reason. The reality on the ground is way more complicated than a single headline can capture. This slide just lays out the contradiction perfectly. On one side, you've got the promise of negotiations, but on the other, you have the harsh reality of ongoing strikes and casualties. So this isn't peace. It's a negotiation that's happening under fire, which makes the whole thing incredibly, incredibly fragile. And this quote just perfectly sums it all up. The ceasefire exists, but trust is still on backorder. So yeah, you've got a technical ceasefire, you've got a diplomatic process starting up, but the one ingredient you absolutely need for any kind of lasting peace, trust, is completely missing. It's on backorder, and nobody knows when or even if that order is ever going to be filled. So given how complex and fragile this news really is, how are global markets reacting? Well, it's definitely not a simple story of everything just going straight up. What we're actually seeing is this giant tug of war, with different assets getting pulled in completely different directions. Let's take a look. The best place to see this tension playing out is in the oil market. Someone called it a geopolitical mood ring, which is just a perfect description, right? Its price is reacting instantly to every little headline, basically changing color based on how risky the market thinks the situation is in the Middle East. Oil recently shot up to over $96 a barrel. Now, it's come down a bit since then, but the key thing is that it's still high. And that high price tells you the market is still very, very worried. It's keeping those nagging fears about inflation very much alive. And this is a brilliant picture of that tug of war. So, US stocks, they're rallying on the good news, but the US dollar is struggling. And gold, that classic safe haven, is holding firm, telling you investors are still hedging their bets. And look at the UK. Bond yields dropped a lot on the news. That's a clear sigh of relief. It shows you that traders are hopeful for sure, but they're not about to abandon their safety nets just yet. Okay, so with the geopolitical story hanging in this fragile balance, the market is already looking ahead for its next big plot driver. And it is a big one. It's something that could easily overshadow everything we've just talked about. So the big question on everyone's mind is, what's the next test? If these ceasefire attacks are Act 1 of the play, what's Act 2? Well, the answer isn't in the Middle East. It's in a spreadsheet somewhere in Washington, D.C. The main event, the one everyone is waiting for, is the upcoming US Consumer Price Index, or CPI, data. This is the big inflation number. And in a market this sensitive to rising prices, this report isn't just data, it's a potential bombshell. And here it is. This is the number everyone is bracing for. The market expects a massive 1% jump in inflation for the month. That is a huge number. A reading like that could just throw all that fragile optimism from the peace talks right out the window. And that leaves us with the final, crucial question. The market is completely caught between this fragile geopolitical hope on one side and these looming inflation fears on the other. So will this CPI number confirm our worst fears about inflation? Or could we get a surprise that brings some relief? The answer to that is going to decide whether hopes for interest rate cuts get a new lease on life or if they get sent back into a long, long hibernation.